We've been waiting for this for like 8 months and we finally got it. The Fed has announced that they're most likely going to be having interest rate drops next year. Jerome Powell said that we could expect as many as three. That is a big deal and it is going to affect virtually everyone. We're going to go over how that may affect you. So there's three reasons I think why this is going to affect, kind of your average American. And the first is that this is a world shaping event. To simply put it, when we look back on this time, I think we're going to talk about this similarly to how we talk about the 2008 global financial crisis, the tech bubble burst of the early 2000s, Black Monday, right? This is going to be a generational shaping event, in my opinion, this historic interest rate rise and now decline. So to quickly cover kind of what's happened, now there's lots of videos on my channel that go over kind of everything that was going on through this, but we had nasty inflation coming out of COVID for a couple of different reasons, and the Fed laid out a very well understood plan to aggressively raise interest rates to try and slow the economy at the risk, and they knew it, of driving the economy into a recession. But that plan was so well laid out and understood that while they did it, everyone was prepared for it, and we never really saw this recession play out. They then kept interest rates higher longer than they expected to because they weren't worried about a recession, and they really got a handle on inflation. Inflation is down to 3% these days. Um, so now the Fed has finally said that they are going to start lowering interest rates. And that's going to be a big deal for the world and have, kind of a big impact on you. So the number two reason why this is important to you is the simplest, which is interest rates are going to come down. That's probably going to affect your average person in probably two ways. The first is that mortgage rates are going to start coming down. So if you did buy a home during this time period where interest rates were high, then you could probably imagine that you could start to refinance that maybe in a year or year or two from now. Or if you've been putting off buying a home, we should see 30-year mortgage rates coming down over the next year, probably looking a little more affordable. The other one, which is the flip side of the coin, is understanding things like CDs or saving accounts rates. Over the last 6 months, when interest rates have been so high, you could go to a bank and get a 5% CD. Uh, However, you probably only got it for 6, 9, maybe 12 months. And often when I talk to clients about this who are like, well, the market's not doing well, I have some cash, so I'm going to buy a CD. And what do you think about it? And I said, well, there's no problem with that right now. The problem is going to be when that matures, and you will probably not be able to roll that into a higher interest rate, right? Which leads me into my third reason, which is around investments, right? So we're going to come back to the CD idea, but investments right now are surging, right? So this was the stock market through this time period. This was when they announced it on Wednesday. You see the stock market yesterday jump like 1.5%. It's up another 0.5%. There's investors have been waiting for news like this for a long time. We're already in the middle of a stock market surge because they were kind of expecting this coming. But to be perfectly honest, I was kind of blindsided at how positive we saw Powell and the Fed. They are not known for their optimism. So this was a little surprising when it came. So as we see investment surge on this, when all of this money does come out of CDs and long-term savings at 5%, let's say in 4 to 8 months, the market rally may have already occurred. And that's the time where I get worried that everyone that has this money come, kind of mature, and they see the stock market's been doing really well, and now they want to sock that money into the stock market, and maybe we get something like a bubble or like an surge in the market that really can't be sustained, and we get a sharp drop again. So I think there's just some timing issues that I would be wary about around the stock market. And if you have money to invest in several months from now, we may just see the market rally get a little too aggressive. Now, the second interesting thing around investments that I think is important to understand is what might happen if we get a little recession next year. So what happens if these high interest rates that we kept high for so long does eventually start working its way through the economy and we do see a little recession next year. I actually did a video and just released this just a few days ago. It is right here. So I covered all of that in that. So I'm not going to repeat myself in this video. You can just watch that if you're interested. Otherwise, I hope this has been informative, and I will talk to you soon.